Hmm. Alrighty. Good morning, everyone. It is Thursday, April 28th, 2022. Let's get rolling with our pre-market analysis for the S&P 500 futures market. I want to really quickly go back to yesterday just to do a quick review here. Coming into the open, it was a pretty strong, well, let's go through this. We opened up and the market was having a lot of trouble right at our orange power level, right at the VWAP. And so until we could actually break out from there, I didn't really want to call any trades. Finally, the bulls got the strength. They started ripping. We called a long here off the fast moving average and our power level or our eye level. Got a nice 13, 14 point push. Came right back to our eye level once again. Called a long from there and from the 200. Got another just about 10, 15, 14, 15 point push from there. And then the market went ahead and started selling off. And when we came up and the market came just in front of the high of the morning and then failed, that's when we were expecting a larger pullback. So when the market went ahead and broke through our two key moving averages that we watch here and started getting down below the fast moving average, I called a short here and went ahead and we wrote it down. Now, here's the thing, our first expected support, if you were in our pre-market session yesterday, was right here at 41.63 to 67. The market came down right into 63 to 67, got a nice bounce out, came right into our 200 moving average. I tried a short here just in front of the 200, didn't really get far, came right to the fast moving average again. And then you can see there was three attempts to get through the 200 moving average and they just could not get through, so they failed. And this is where it started to look like we were going to get a pullback all the way down to the lows of the day before. But what it ended up being was a peak below and a bounce. So they faked out all the bears. You can see I tried to get short, got stopped out on that trade, tried to get short off VWAP, only got to the fast moving average, so had to close that trade out. And then I was basically done for the morning because I was able to capture these two 10-point bounces and the sell-off that are at least in down into here. So that was basically it. And then we came down and pulled back into the 200 and got a beautiful bounce right out of it there. In fact, I believe that was right at the end of our trading session yesterday. And I mentioned to the traders that this very well could hold, even though we were in a somewhat, sideways looking balanced market. You can see up, down, with the median right there where the VWAP is. There was a very possible chance we could bounce right out, and then sure enough, got another, 10, 15 point bounce off the 200. I'm not sure what happened the rest of the day. I didn't really watch here, but it looks like we got a nice push up to get above our major eye level at 4,200, and then they just petered out and came back down. And it's just been a fairly sideways, choppy market for the last few days, but we are breaking out to the upside now coming into the open here. So it's been very sideways balanced yesterday, and you can see in the overnight session, the bulls finally got a little bit of strength and kind of started pushing to new higher highs. Now there's something here for my members we need to update. 42.56.50 is actually the major eye level. 4240 is the minor eye level. So we need to go back in there and switch up the colors. But, neither here nor there. We still have the levels on the chart. We just need to redefine what they are. So let's take a look at this morning. We're going to jump up to our daily chart and then dial down to the short time frames and start looking for levels that are going to be relevant coming into the open. So on the daily here, you can see again, we broke out into a higher high this morning outside of previous daily range. So maybe some strength coming into the market. But let's just look at this really quickly. In fact, might make sense to go down to a 60-minute chart. And I'm sorry there are so many lines. This is just, the ranges are so wide that these lines look very close together, but most of them are about 10 to 20 points away from each other. So let's look at this. Every time the market has tried to start ripping higher, the bears come in and just continue to swat it down. So even though we have some nice follow through this morning and the bulls are starting to rip to higher highs compared to yesterday's range, that really doesn't mean very much, right? Because every time the bulls try to rip things higher, we get a little bit of momentum, and then the next thing you know, the bears swat it back down and we're down to lower lows. So I don't think the story is any different this morning. It's not like the economic landscape or the global instability situation is any better. In fact, every day it just seems to crumble and get worse and worse, right? So I don't expect any type of major breakout just from a fundamental perspective. Of course, anything's possible in the market, so we don't want to discount what could possibly happen on the bullish side this morning. But I mean, just look at what happened here for what the last basically for the whole year. Attempt by the bulls to break out and then swatting down, attempts to break out and continuous swats down. Every once in a while we get a nice little follow through by the bulls and then it gets so only so far and then we come back and look, we retraced this attempt by the bulls to bounce out from the March lows. So let's go back up to the daily real quickly here and take a look. The retracement of this whole sell-off from the highs of the end of March and then going down through this sell-off. If we look at the retracements here, I've got them marked on the chart here at 42 quarter, 44, 42 quarter, 43.84, and 43.25.50. I've got them marked on there on as light blue fib retracement lines that we have established in my room. Just so that we're aware, if the bulls do start to rip higher this morning, we're going to be coming up into those really key levels. So be aware of the major retracements. And then outside of that, there are two major swings that I'm watching here. If the bulls start ripping higher from the zoomed out perspective, we've got a major swing low down over here at 43.20 quarter. And then if the bulls get through there, the next major swing is down here at 43.55.50. So just be aware of those two swings. Notice that the 38% retracement is lining up with that swing, and it's also the retracement of the smaller leg right here. So from this high down to this low, which we can talk about. So we've got great confluence sitting there right around, say, 24 to 25 to 26. Wouldn't be surprising to see the market push up, get follow through, get the bulls involved, and then get some type of resistance right off that level. So be aware of that. And then again, be aware of those two major swings that I just mentioned. So let's go down into the major structure zones. And again, I just can't believe how well this works. Look, we came up to the top of this structure zone, came all the way down and bounced directly off that structure zone, came up, failed just in front of this one, came down and bounced right off this one, and now we came up and we're failing off this one, right? So that's why I want to redefine this 5650 eye level to the major level, because that's technically the major support and resistance level going back into the past. And for some reason, I marked it as a minor level, but it's actually the major level there. So just important to note that we're holding at the expected structure zone right there, and we're pulling back right now. Just like we held off the structure zone on, I believe, Wednesday's low and got this nice bullish rip higher. So it's important to note that we're stuck right there, and then we do have a shorter time frame swing sitting just a few points above the high we made so far. So we've got those levels, and you can see the smaller retracement of this smaller leg here. And let's go ahead and define it, right? So we got the bounce out, an attempt by the bulls to push higher, and then this major failure down to that low. This is the leg I'm talking about right here. And we've got confluence, like I said, 50% of this leg is the 38 retrace of the entire sell-off from again, the end of the March highs all the way down to the lows. So there's nice confluence there at that 22, 23, 24 area. And then the 61.8 happens to be pretty close to the other retracement that we had. So just be aware of those zones. And now I want to talk about all these different levels we're going to be dealing with this morning in between the levels that I just mentioned. So coming into the open here, if the bulls end up getting through this 43.27 area, which is the high from yesterday. Let me see what the actual number, 42.36 quarter. If the bulls can get through that high and get through the overnight high, these are the levels we're going to be dealing with this morning. So the overnight high here is essentially this little pocket right here between, again, 56.50, which we have to redefine as the major level, right into that 62. So that pocket right there, once it breaks, we've got the swing there that I mentioned at 60. Let's get the actual number at 68, 42.68, and then we're up into the first retracement level. So this little pocket right here, just like this would make sense to be a resistance zone, this pocket here from the retracement into our minor eye level would be the first area I would expect to be a trouble spot. Again, if they can get through the overnight high pocket and get through that swing right there. So that's what I'm targeting to the upside there. And then again, it's basically one by one. 43.06 quarter is the next minor eye level. Notice we failed just in front of it here for the major sell-off back on, again, I think that was Wednesday, if I recall correctly. And then we're up into the pocket up here at 43.2450. So this is that huge confluence that I mentioned. We've got 43.20 swing. We've got the two retracement levels and our major eye level all sitting in this little area right here. So if the bulls do end up getting through everything, that right there sticks out like a sore thumb to me. Remember, there's so many different scenarios that the market can do. But if the bulls are strong, they might just go ahead and rip right through all these levels, right? Remember, when there's a major sell-off or a major buyback, these levels might work in a short pullback type of situation, but if it's strong, they're just going to go ahead and rip through everything. So it's not like it's a hard case that they're going to hold. But these are the most important levels. If we get through there, we're back to 48, and that next major swing that I mentioned up at 43.55.50, and then we're up into this 43.61 major swing back from the lows of the overnight session of April 22nd there. And there's also a retracement essentially right in that little area. So that would be the next pocket that I would expect to be trouble for the bulls if they make it up there. I don't know if it makes sense to continue going to the upside because I highly doubt we're going to get there this morning, but anything's possible. So that's what we got up on the top end. Of course, this swing here at 43.55.50 really sticks out to me. So we've got that swing and then this one pocket. Anything beyond that, we already talked about some of the retracement levels, but we've got 97, 44.15, and then all these levels up top should sound very familiar to you if you've been following our pre-market sessions. 15, 31, 44, 45, and then the next major structure zone up here at 54 quarter. And you can see we've highlighted these levels to watch, or at least these little zones, but the market hasn't been back to test them. So I don't think that anything's changed up there. If we make it up there, those are those pockets that we're going to want to be aware of. So let's go down into what we're dealing with below us. So if the market ends up pulling back, and let's just exaggerate this and get this in view. If the market does start to pull back here, we can't get through the orange power level, the previous daily high, or even if we do and we fail and we come down, the close of yesterday, the extended trading hour close was down here at 42.11, and we have our minor eye level here at 13. So this would be our first level of potential support if we do get down into that level. And then a little bit deeper than that, we have to look actually at the retracement of this whole push, because those levels are going to be relevant this morning. So let me go ahead and throw the retracement up, low at 36.75, up to the high of the overnight session, which is 58.75. So we'll throw it up there. Oh, look at that. 38% of this whole leg is the first zone that I just highlighted. Perfect. Next little retracement zone here at 50 is the 97.75 up to 4200, our major eye level. And 4200, despite all of the sideways action that we've had yesterday, actually worked really well on some of these tests. You can't see it on a 60-minute chart, but if we went down to the tick or the 1 minute or the 3 minute, you'll see that it was very relevant. In fact, the low of the overnight session right here was basically the 4200. It was 4200 half. So right off that level. Beware of that if we do break through the close from yesterday, and then we're down into 50% of the previous day, which can be relevant, not necessarily as strong as, say, the orange power level or some of our major eye levels, but we want to be aware of it. So it's there at 92.50. And then a little bit deeper, and look at that, the 61.8 retrace happens to line up with a relevant swing that we were watching from much earlier in the market. So be aware of that. We at least have it marked on our charts as a dotted line here. So I'm going to leave that there. And remember that it just is what it is. I mean, just look at what happened yesterday. Yesterday was just a very balanced, up and down, choppy situation. So when we pull back into that, there's going to be a whole lot of relevant stuff very close together. There's just no way to get around it. So we've got the 4200 to 4197.75. We've got 50% of yesterday for whatever it's worth. Our minor eye level at 89, and then the 61.8 retrace down here where we have this dotted line at 82.75 to 83. Outside of that, I don't know if there's really anything else to mention here. If this stuff ends up breaking and we get below this line you see here at 67.50, it's a very clean shot right back down to our major eye level at 42.25. So if we break through 66, 67 here, yes, there's probably some little minor relevant things in here, but to me, looks like we're right to the major structure zone, which, as you can see, we came down and basically held. So we held 42. Wouldn't be surprised if we came back to test that. Now, if it breaks and the market ends up breaking through the lows of yesterday and the day before, we've got everything lined up down here. And I might have to mute somebody here. Not sure who that is. Let me see. There. It's Tim or Dr. Tim or something. All right, so if the market breaks through the lows of yesterday and the day before, we've got 4108 as these are targets to the downside, the most relevant levels that would make sense for to see some type of support. 0850, 4080, and you notice these are very far apart. Like I said, when you zoom out, it looks like everything's all close together here, but the ranges are so wide that, it looks like that. So 4080, and then from there, 4042, 4023, and then we're into the next major structure zone right around 4000. I've got it right at 4004 to the tick. Remember that with the major structure zones, they typically will work on and hold to the tick. We've seen it in so many instances just in the last 24 hours. But it can get fairly messy because that is a major structure zone down there. So 4004, give or take a few points in that area. If that breaks and the bears continue to sell things off, the next major structure zone is another about 50 points down to 39.45. Again, give or take a few points on either side of it, and then we're down to 39.14. And hopefully that's not where we're going. Hopefully we don't get this major sell-off. But those are all the levels that you guys want to be aware of coming into the open right now. And again, be careful in this area between about 42.25 and 41.65. That whole zone right there is a mess, right? So ideally we're going to hold from one of the levels and get a nice trending move, or we just go ahead and dump right on through all this stuff and start exploring this little area between the 41.42 and 4000. So that's it for this morning. Let me see if there's anything from a divergence perspective that's worth mentioning here. Looking at the daily 4 hour. I don't really see anything that's going to help us this morning. We do have a multiple time frame, and let me bring this up. We do have many relevant time frames giving us a bearish signal from the high of the overnight session. So if that holds and we can't get through it, or if the market comes up and kind of tests it or peaks above it and fails, then that's giving us a clue to get short and continue to ride this puppy down. If the market, I shouldn't say we, if the market gets up through the overnight high and actually holds in some way and starts pushing, then that's a clue that we've negated that multiple time frame bearish signal from the overnight high. So be aware of that. And I think that's basically it. I hope you guys have a great trading morning. Of course, we'll be here every Monday morning and Thursday morning doing these public broadcasts. And if you want to join us in the trade room, give me a ring and we can talk about it. We do also, for any of our members that are in here right now, we have our study session today. So hopefully I will see you guys shortly after our morning trading session. So enjoy, guys. We will see you on Monday morning, bright and early. Have a great weekend and a great trading morning. Bye bye. Hey, we got LT back. Hope you had a good, refreshing vacation. Welcome back. Okay. I think I need to do the same thing. I need a nice, like, 2 week vacation. Let's see. Okay, I need to mute that.